Welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts out there. My name is Patrick Denawilla, and I'll be your host. We've got a great show for you today. Jerry Parker is going to be joining us. Jerry is the founder and CEO of Chesapeake Capital, and he's one of the original turtle traders. Now, who were the turtle traders? Back in the 1980s, a pair of successful commodity traders, Richard Dennis and William Eckhart, wanted to settle a bet on whether traders could be taught or if it was some sort of inherent skill. Think nature versus nurture. To settle the bet, they put an ad in the newspaper looking for traders. Thousands applied, but only a handful were accepted. They were taught how to trade using a strict trend-following system and given $1 million each. Many of them, including Jerry, went on to manage billions of dollars, and Jerry is one of the more successful turtles. So it's going to be a great conversation, but before we talk to Jerry, it's Friday, the markets are closed, so let's take a quick look at how this week played out. Hey guys, thanks for watching. Just a quick reminder, be sure to click like and subscribe so we can continue bringing you awesome content. Thanks. All right, all four major indices closed higher this week. The NASDAQ led for once, rising nearly 9%. This was actually the third best week for the NASDAQ in the past decade. The Dow lagged, but it still gained a little more than 4%. Now, one of the biggest developments this week was the weakness in the dollar. The US dollar index had its worst week since 2009, dropping about 4%. Now, as you can see, it violated the uptrend that it's been in for a majority of this year. And as we've talked about, dollar strength has been putting pressure on stocks all year. So the bulls finally got that breakdown that they were waiting for. Another big development this week was, of course, crypto. Bitcoin is down about 20% on the week. It's trading below those prior cycle highs, which are around 19,000. As long as we're below there, the risk is to the downside. But I do think it's worth noting that stocks didn't follow Bitcoin lower this week. If you look at something like the NASDAQ and Bitcoin, they've been trading together all year, but they certainly went their separate ways this week. Taking a quick look at the sector performance, all 11 sectors closed higher this week. Tech led, gaining about 10%. Utilities lagged, but they still closed higher by about 1.5%. Anyways, that's enough from me. Let's talk to Jerry. All right, Jerry, welcome on, and thank you for joining us today.
Thanks for having me, Patrick.
Yeah, I've been a fan of yours for a while, and the first time I heard you speak was at Stocktoberfest. I think it was in 2015 out here in California, and I was probably 21 years old. I had never heard of you or the turtle traders or even trend following, and There were a lot of speakers that day at that conference, but the room was packed to hear you speak, and the audience was captivated by your story and the story of the turtle traders. So I figured this guy must have something good to say. And looking back on it, it really did spark my interest in looking at markets through a technical lens. So I wanted to have you on the show today to share the story of the turtle traders and your trading too. And I'm sure you're probably sick of recanting it by now, but if it sends one person down the trend following rabbit hole, then I think mission accomplished for us. But before we talk about the turtles, I want to give our viewers a quick introduction on trend following in case they're unfamiliar with it. And I realize it's pretty self-explanatory, but it can get fairly nuanced. So if you were explaining it to somebody, sitting next to you on a plane, what in your definition is trend following, and how do you think about it within the broader umbrella of technical analysis?
Well, trend following to me is taking small losses and letting your profits run. And I think that pretty much sums it up broadly. And it also is saying, per trade. So every trade, we want to take small losses. Every trade, if it turns into a profit, we want to be reluctant. We're not in a hurry to get out. We want to let those profits run. Our system is going to be sort of long-term. The this term loose pants. We're not our exit is not too close to the market most of the time. We're going to let a lot of things happen, volatilities, sell-offs, rallies, whatever, and just try to hang on as long as we can. We're following our rules, of course.
Sorry to interrupt. What indicators are typically involved in trend following? Is it just moving averages, or there's more to it than that, right?
Well, there is, but I think on the entry and exit side, where you're coming up with these objective rules on, when you're going to enter, when you're going to exit, you could use breakouts, moving averages, moving average crossovers. I think they all work about the same. I prefer moving averages. I prefer breakouts. I've used breakouts since 1983, so I'm not going to change. I really like the breakouts. They have a tendency to keep you in the trade longer. It's sort of the opposite of what human nature wants. You kind of want to get out of these profitable trades, book that profit. You don't really you want to err on the side of not giving back too much profit. So I think what works better is err on the side of staying in longer and potentially giving back more profit. But usually, or in the long run, what will happen is you'll end up just making more money, because it's so hard to stay in these long-term trends, especially when you build up a lot of profit over a year or two.
Yeah, it's funny you say that, because I feel like when you're learning to trade for the first time, the biggest hurdle, the first kind of hurdle, is learning to take small losses, right? But something you've said often and talked about is the difficulty of staying with the trend. You just mentioned it, but I think that's kind of like the next level, right? Like once you learn how to take losses, the next hurdle becomes staying with the trend and staying in those trades, because it can be really hard,
Well, I think you should be able to walk and chew gum at the same time. So when Richard Dennis told me to take small losses and let my profits run, he was sort of expecting me to be able to do that at the same time. And so I think but it is difficult, and you can have when I started out, I had a difficulty with both. It's not so much taking the small loss. I think for me, it's, if the trade turns into a loss, whatever, get out. But how it impacted me negatively was I was afraid to do trades sometimes, because I didn't want to take what might be a loss. It hadn't even become a loss because I haven't even put the trade on. So that's one of the most important rules of trend following, hunting outlier trades, the type of trend following that I do, where your performance is going to be dominated by 5 or 10% of your trades each year, is you've got to do the trade. And you can't miss a big trend. And I missed some big trends when I first started. I was a little intimidated, a little shy, but you have to be bold and put those trades on.
Yeah, and another thing I want to mention is in a trend following strategy, typically the win rate is around like 50%-ish, sometimes even worse, right? And that's another thing that a lot of people, I think, have difficulty with, right? Because the market's telling you you're wrong, but in the long run, if you look at it, if you're taking small losses and your gains are outsized, then you'll make money, right?
Well, that's the formula. When I first heard about trend following, I was in my mid-20s, and I thought this is the greatest thing ever. And I just thought immediately, well, here's the big question is, are the big winners going to pay for the little losers? And I was so excited about trend following and this objective approach that I could understand, and felt like that I could possibly execute, that I was working in the accounting firm at the time, and I just had my calculator on my desk, and I put in, what happens if I make 100% a year with my $1,000? And I was just compounding 100% every year. And I thought, yeah, this is going to be really good for me. I'm going to really make a lot of money here. So I was pretty naive, but it is really a great strategy, and one that, most people can understand and execute.
Yeah, so let's get right into the story of the turtle traders. So you said you were in your mid-20s, and how did you really stumble on the turtle trading program? I know there was an ad in the newspaper from Richard Dennis and William Eckhart, but what was that like?
That's right. I saw an ad in the Wall Street Journal for Richard Dennis wanted to hire traders and teach them how to trade and then give them money to trade. And so this was like a dream job. Of course, I had read an article, as luck would have it, from Business Week or something about Richard Dennis. So I knew it was legitimate. And I thought this is a great thing to do. I really wanted to be a trader. And for most people, trend following is, they're not just going to trend follow stocks, for instance, but they're going to use futures markets so they can access currencies, commodities, and interest rates as well, go long and short. And I understood this, and I really thought this is great. I mean, more diversification, shorts, whatever. I don't know anything about shorts, but why not? Probably. So I had a complete open mind, and I knew that this Richard Dennis thing was something I should really try for. And it was really fortunate because, I mean, who even looks at the Wall Street Journal 1 ads, for employment? I mean, they don't even have them probably anymore. I don't even know, but it was rare. And so I stumbled onto it, sent my resume in, and they sent, 1,000 people applied in 1983, and they sent out a test. Anybody who sent a resume in got a 100-question true-false test. So that was the first thing I had to tackle, was that test.
And what were some of the questions on that test like? Were they looking to test your trading abilities and your experience with trading, or was it more just kind of a general intelligence or kind of like an IQ test?
I think it was mostly, there's a few questions about trading, which we probably didn't have any reason to know the answers to. I had studied trend following a lot, and I had read books and newsletters. I was following Marty Zweig, who's a stock guy who had some trend indicators. So I was prepared for this test pretty well. Some of the questions were psychological questions, like how to think about the markets, how to think about life in general. One of the questions was, it takes money to make money, true or false? A trader should love their losses, true or false? And so I had sort of a contrarian idea that, maybe the obvious answer wasn't exactly correct. So I was pretty good at taking tests. I had a good strategy, so I did pretty well on the test, and I think that's why they hired me.
Yeah, and you mentioned 1,000 people applied, but only like 23 were accepted, is that correct?
Well, it was 12 in the first year. Then they did the thing again in the next year. And so they hired 8 the following year. So a total of 2,000 people over 2 years, and 20 people total.
And why you guys? Like, why you? What were the qualities that they were looking for in traders?
Well, they wanted good qualities that they could teach trading too. So no good traders, but just teachable. And it's surprising how you have these wealthy people. They're very super smart, just pretty much geniuses. And some of the people still wouldn't listen and had a difficult time following the rules. I did well in the tests. That's what I had going for me. Other people had other things, going for them. They were Harvard or blackjack player, backgammon player, chess player. One guy was an actor. So they wanted a broad range of people, and I don't think it was very predictable necessarily who would be able to understand the rules, number one, be willing to follow the rules under pressure, and not really question, what we had been taught. And so some people couldn't follow the rules, and they questioned. The question is like, is this really right? Are they really telling us the right stuff? So I had no trouble with any of that. I was very thankful. We were all very thankful, and we just wanted to please Rich. We thought he was the greatest guy ever. We knew he had the greatest job ever. We were learning things that we would never learn from college, or just rare ideas. And so we knew we had it made, at least there for a while.
So you get accepted into the program, you give up accounting, and did you move to Chicago for the training program?
I did. I was so happy to give up accounting, and I love moving to Chicago.
I can imagine.
Yeah, I loved moving to Chicago. I was really into sports and movies and restaurants. And of course, I was coming from Richmond, Virginia. I love Richmond, but it's at the time, pretty small. I love the sports. I think Jordan was drafted the year I went to Chicago. It was just fantastic. The Bears won the Super Bowl the year after. It was a great place to be with all these smart new friends of mine and Rich and Bill. And I love Chicago. I sold my car and I sold everything I had. And I went to Chicago with 2 suitcases. That's all I had. And I got a great apartment near the beach in the best spot in Chicago. And so I was living a great, fun life. The first weekend, the winter of '83 was super cold. It was cold all around the country. And the first weekend I was there, the person from the local news was near the bars near my apartment, and they were saying that no one is out tonight. No one is on the street. No one is in the bars of Chicago because it's a wind chill of 20 below or something. So I was really surprised that people wanted to live in such cold weather, but I ended up really loving Chicago, and it's just a fantastic place.
So this was what, like 1983, 84?
The December of '83.
Okay. And what was the training program like? Like how long did you go through this training process before they trusted you with actual capital? Was there like a paper trading involved or?
I have a photographic memory when it comes to things about trading, but I can never remember if it was 2 or 3 weeks. It was either 2 or 3 weeks long, from like 8 to 5
Wow,
at a
that's
hotel.
shorter than I would have thought.
Yeah. And there was no paper trading. We were supposed to just listen and understand, follow the rules. So January the 2nd, 1984, we were given $1 million each, and we started trading.
What was that? Well, yeah, I mean, you were a 25-year-old kid. That must have been surreal.
Very
Um,
surreal. And we were all in the same office together, not with Rich and Bill. They were somewhere else. But so we had a lot of camaraderie, and you could see other people who were more bold and less afraid start doing trades. And so maybe that encouraged me to pick the phone up and do the trade. But yeah, it was absolutely fantastic. After about a week, Rich called each one of us. So the phone was ringing like 12 times around the office. And so I was waiting for my time, and Rich was like, well, how was your first week of trading? And I said, I think it went pretty well. And he said, well, how many trades did you do? I said, I think I did about 10. And he said, well, how many trades do you think you should have done? I said, well, probably like 25. And he was like, yeah, don't worry about it. Just do the trades. And so
wow.
the number one rule was to do the trades. So here I was, after 1 week, I screwed it up. And his response was just so, comforting and understanding to some degree that, like, come on now. He had every right to yell at me and get mad, but he was like, come on now, you can do it. Pick the phone up, do those trades. Don't worry about it. You're going to lose money. You're going to make money. Just, get used to rolling with the punches.
And were you exclusively trading commodities or were you, currencies as well? It was all futures, is that right?
It was all futures. It was commodities, currencies, bond futures, and stock index futures. So we were supposed to apply these rules to all the markets in the same way. There was no market specific or sector specific rules. It didn't really matter what it was that we were trading, according to Rich. In fact, he would say, I can cover up the name of the market on my chart page and I'll know exactly what to do. And I agree with that. There's no real difference between, this is a heretical, this is kind of a controversial point of view. Trend followers, especially turtle trend followers, we have a lot of weird, controversial viewpoints. So I won't say that again, but I don't expect people to really understand or agree with what I say so much. But we I don't think you need to worry about which market you're trading, or you're going to buy the same breakout or sell the same breakout, do the same, handle every trade the same way. If it's Tesla or the Japanese yen, it doesn't matter.
And by the way, where did the term turtle trader even come from?
Well, we needed a nickname, Patrick, and somehow that came up. We needed a nickname or something like that. They were trying to find a nickname. So, like I said, initially it was 12 of us, and I think the 12 apostles, the 12 disciples, that didn't sound good. But evidently, Rich was on a trip, and during his trip, they went to a turtle farm, or they saw some people, in Asia farming turtles, raising turtles. And someone said, "Hey, Rich, that's just like you, raising traders back in Chicago." There it is. There it is. That's how nicknames get started, right?
That's
Some
it. That's
comment, some stupid comment. So
it's as
yeah,
simple as that.
it was as simple as that. And I remember that pretty. So no matter what some other person tells you, that's the truth, Patrick.
So what I want to know is, what was it like when you guys started making the big bucks? I mean, you guys were essentially kids, right? You were in your mid-20s, and here you guys were making millions of dollars. I mean, did anyone struggle with that kind of like almost overnight success?
Well, overnight success. No, we weren't struggling with the success part. We were
I
struggling
mean, the
with,
millions help, yeah.
yeah, we were struggling with the following the rules. There's a lot of money on the line. There's big bonuses on the line. Once again, you're going to be tempted to not do a trade or get out of a trade too quickly. And you're going to be have anxiety and stress because of the drawdowns. And I think some people were more aware of our leverage and how large we were trading and how much risk we were taking. All of those large losses, large risk, large leverage, big drawdowns. And they were scared before they even made any money because they thought this is trading way too big. Some of us, it was a big benefit not to know very much and be an open book for Rich just to pour into us whatever he wanted to. And so we just went with it and did it because he said it. And he was a big trader. He liked to trade large and take big swings and make a lot of money. So we were making 200% a year usually, but with big drawdowns, big volatility. So some people figured that out before they had actually done the first trade, and it kind of hampered their ability to to follow the instructions. We were working for Rich. They told us if you follow the rules and lose money, you'll be okay. And if you don't follow the rules and you end up making money, we'll be very upset. So it was the big focus on do the right thing, do the hard thing. Trading is hard. It's psychologically difficult. Buying the highs, selling the lows. For us, it was maybe 35% winning trades, 40% winning trades. Wow. So it's psychologically tough. Trend following works because I think part of the reason it works is it's hard to do mentally.
Yeah, and where did Richard, your mentor, Richard Dennis, do you know where he kind of learned all this stuff and picked up all these skills?
Well, psychologically, he's very tough, and he's a very unique person, and intellectually and psychologically. He was the nicest, sweetest, most understanding person I've ever met until you started making excuses for your mistakes in trading. I don't think he had much tolerance for that. I don't know if I know exactly how he learned. I know that he was good at math. Bill Eckhart was a math genius. They had the capability to do back testing. Even back in the 80s, they had computers and programmers. And so I think they may have started with this idea that trend following might work. And listening to the cliches, the cliche that I started out with, take small losses and let your profits run, that's probably been around for hundreds of years. So they probably tested that. I know they like to test things and prove most of these cliches wrong. But I think that's one that they probably ended up proving was correct. And that's the basis of what they told us.
Yeah, and you mentioned he put a big emphasis on following the rules. So what were the repercussions if you broke the rules? Did anybody do that?
Well, people would be given a good talking to. And then if you broke the rules, um, it showed up in your performance. So you wouldn't get a big bonus, or you may not be invited back the next year. So where you feel bad about finishing, in the lower part of the group. I mean, everybody had the same rules. No one, I don't think, really added too much additional ideas to the rules. So a good assumption would be, well, you all made about the same amount of money, right? Yeah, pretty much, except maybe one or two people traded a lot larger and they were told not to, but they got away with it. And maybe a couple of people didn't follow the rules the way they should and traded very small. But the bulk of us, I think, made about, that 150 to 200% a year.
Now, did any traders blow up or just fail miserably? And if so, what in your opinion were their mistakes?
Well, I think in general, none of the turtles really blew up. I think some people pushed it to see how much they could push it to trade a little bit larger. And but I'm pretty sure Rich made a point of saying, like, you're going to be in trouble for two different reasons. The two most important things. One is not following the rules. Number two, trading too large. And they can kind of be combined. If you trade too large, it's hard to follow the rules because you'll get into a situation where you will get freaked out and not want to do the trades, or you'll have to trade so much smaller to not lose all of your capital. That will impact your ability to kind of follow the rules. But not following the rules can have a lot of negative consequences. So it can be a combination of those two. And whenever I've underperformed and evaluated my performance honestly, which I tend to do like every 15 minutes, that's one of those two things. I've traded too large for my personality or for my bank account. And I've also just, for whatever reason, not followed the system, not done the trades or got out too quickly. And it's just the human condition. You're always fighting yourself and trying to follow those rules.
Yeah, and so how long did the program run for?
It started, like I said, it started in the fall of '83. We started trading January '84, and then it ended in 1988. So about 4 years, and it ended about the beginning of '88. So about a little over 4 years. I think we would have benefited for staying there a lot longer. We were in this sort of pretend atmosphere, controlled environment where we had to please Rich by following the rules. Don't worry so much about losing money. We have rules in place if we start going into drawdowns and the markets are not friendly. And here's money. And sometimes if we had a major drawdown, Rich would say, here's more money. So that just doesn't happen in the real world. People are not going to give you more money when you lose. Clients are totally fine if you tell them, oh, I broke the rules today, but I got lucky and we made more money. They're like, well, break the rules again. We don't care. And if you go to the clients and say, hey, don't worry about us losing money, I'm following the rules, they'd say, what the hell is wrong with you? You need to make money. I don't care about these damn rules. So it was just the type of encouragement. And, I've sort of described it as, you can read a manual on how to be a Marine, and here's all the rules on being a Marine. But look, being a Marine is going to boot camp in Quantico or wherever it is. And so we got lucky because being a trend follower and a trader, it's the rules. Don't get me wrong. And you can do it without experiencing 4 years with Richard Dennis and Bill Eckhart. But boy, if you get a chance to do that, you're going to have a leg up. So I give all the credit. I'm so thankful too that I never had a really lucky period where I broke the rules and I made money. I've always been punished by breaking the rules. So I think that's something to be thankful for. You don't want to kid yourself into thinking that you have some special discretionary talent.
Yeah, I think it can be so dangerous when you break the rules and it actually works out because it reinforces this bad habit and these bad behaviors. But, and I think Richard Dennis actually has a quote about the rules, following the rules, something like, I could publish the rules of trading in the newspaper and nobody would follow them. Meaning it's one thing to know, and it's a whole nother thing to actually stick to it. And that's kind of the edge, right? That's kind of the game right there.
Oh yeah, the rules are, I don't like to talk about how the rules are, everybody, you can just use any rule, all the rules are kind of the same. They're not. You need to have good rules. I don't even think in those terms. I want to have the best rules possible. I got plenty of time on my hands to figure out what rules are better than other rules, and you cannot discount the rules. But putting the whole thing together, it's difficult. It's like building a large house. There's lots of moving components, moving parts to it, and they're all important. You want the AC to work, the hot water, the Wi-Fi, and you have to be good at putting the whole thing together. And over time, if you have weaknesses, you'll be found out. And so I think that you don't want to discount how important all the specifics are. It is true that when the big trends show up, like 21 and 22, then everybody makes money, sure. But you want to have your act together in a really big way. But the primary purpose of the rules is to be disciplined. So you do the same thing each time. I remember Rich saying, if you just have average rules, don't brag about your average rules. Don't take comfort in having average rules. But if you end up just having average rules, you'll be better than so many other people, but if you just follow them all the time. And so that I think is super important. And that's what, I try to do, and we try to do as much as possible. And that was what they were trying to teach us, follow these rules.
And did you have any really bad trades, like kind of a worse trade really early on that taught you some really valuable lessons that you can remember? Anything that stands out?
I saw some people get unlucky in certain trades, put an order in at the wrong time. But I'm trying to think of a bad trade. Not really. The trend followers, they don't have bad trades. You can have a bad trade, but it's probably not going to be your fault because you're going to buy these breakouts and hold on to it if it's a profit. If it crashes before you get out, that's your bad luck. But you're probably not going to sit through it. That's the opposite of the problem. The problem is the trend follow. People want to get out too quickly. So once it just gets really close and barely touches your exit, man, you're out of there. You want to take that profit. And taking small losses, I don't think is a problem necessarily. I never was a problem for anybody that I knew. However, the big problem is missing the big trade. And so that's the lesson. You have these things burned into your memory of why did I miss that trade? And I'd say the very first big trade that half the turtles missed was February heating oil, February 1984. And it just went up a lot and only like half the room bought the trade. So I never will forget that trade. And that's why for a trend follower, who's waiting on 5 or 10% of the trades to make all the money, if you bypass a trade, it will be one of those 5 or 10%. I will almost guarantee you that you'll have really, really bad luck if you think you're going to avoid trades and it's not going to hurt.
And so you said that the program ended in 1988, is that right?
Mhm.
So how did it kind of come to an end?
Well, I think that it was very successful. In 1987 was very successful, and um, 86, 85, 84, they were all successful years. So I think what happened was they just got kind of tired of it and just decided, okay, we committed to 5 years, but 4 is all we can handle, and it's time to let you guys move on. And we were kind of sad, and we wanted to stay there longer. We would have learned so much from working with Rich and being a part of that. And, you know, another 4 years of this boot camp and being learning more from them and being encouraged by them. But I think they just kind of said, okay, it's time for you to move on. And we had no idea that we could take our track record, start these businesses, raise hundreds of millions of dollars, billions of dollars, and make way more money. So we didn't know that, but but still, I would have been totally fine working there for the rest of my life and, trading, making money, and hanging out with those guys. But
Yeah, so what was that?
it was a great life after as well. And that's the way it all happened. But, there's pros and cons um, leaving Chicago.
And what was that transition like to starting Chesapeake Capital? Did you go right from the turtle trading program to starting Chesapeake?
Yes, as quickly as possible. Oh my gosh, yes, we have to if the turtle program ends on Friday, we have to start trading on Monday. We cannot take a day off. We have to keep this track record going. We have trades to do, Patrick. We cannot mess around. So I would start Chesapeake. And like I said, we had this incredible asset. We had a 4-year track record with outstanding numbers. And I would call people or go to New York, try to get meetings. I remember walking around Wall Street one time, and I went to a payphone to call the person that ran the managed futures department at Merrill Lynch. And I called up and I said, I would like to come up and meet with you and talk about trading and my track record. And the person on the phone said, no. And it was a representative of that person. It was a secretary or an associate. And I said, well, tell him that I'm a turtle. And she said, okay, hold on. And so she came back and she was laughing. She said, yeah, come on up. You can have a meeting. So we had the track record. We had the turtle. We had Richard Dennis's name. We had a lot going for us. We were able to get meetings, and people liked us and believed in us. And people were greedy. They wanted us to make them a lot of money. And so to some degree, they would throw money at us in the hopes that, we could continue doing what we had done.
So it sounds like it was kind of exciting for you, that starting Chesapeake. It wasn't this like, oh crap, what do I do now kind of thing. It was like, all right, let's do this, yeah?
Oh yeah, let's do it. Let's trade more markets. Let's raise more money. It was a little intimidating, or it was a little sketchy for me. I remember the first time I did a trade that wasn't strictly 100% by the book. Maybe I waited like a little bit longer. And I felt like, oh man, I bet you're Rich. I felt a little guilty, like, oh, I don't think Rich would approve of this. But it was so close to a system trade. I was just trying to do my own thing to some degree. I was very, another thing that they really hammered into us was trade as many markets as possible.
For diversification?
Diversification, exactly. Find more outliers, increase your portfolio to, you're going to trade this systematic approach that's very choppy, very bumpy, very lumpy is another term that people use. And so, but you can do something about it, which is add more markets. It won't take a lot of the lumpiness away, but it'll be something. And it has no downside to add more markets. So I was just like very, very intense about this for my entire career. I'm one of the few CTAs that trades single stocks. I trade 250 markets now, all
Wow.
the currencies, all the interest rates, fixed income ETFs, stock ETFs, all the commodities. Yeah, as many markets as I can possibly find. I'm not stopping. And I've been this way my whole career. So it was so much fun to, and I was able to not deviate hardly at all from what I was taught, certainly nothing philosophically. And then at the same time, stick with the program and add these markets. So it was a blast. I still have so much fun every day.
Now, are you trading your own money these days? Are you still managing outside money?
Both, yeah. I have a fund that has my money and my clients' money. So I have clients that I've had for 20 years and my own money as well. So I have, yeah, it's a great way to spend the day with my head down, thinking about this fund. And that's a big selling point. People will say things like, well, an incentive fee is important because it aligns you with the client. Well, I don't know about
Yeah.
that, but I know what aligns you with the client, and that is having your own money in there with your clients. Then we're very aligned, and people people know that I love my money. I may love my money a little bit more than I love your money, Patrick. So I'm going
Skin in the
to
game.
do I'm going to do the right thing, and I'm going to do all that I can. No detail is too small when it comes to trading. I'm a very intense, detail-oriented person.
Yeah, well, I'm sure those clients who have been with you for 20 years are very happy. But Jerry, I want to know if you could boil down the success of the Turtle Traders to, one thing, what would it be? Was it the fact that you had a good mentor? Was it the emphasis on risk control? Was it just trend following in general? I mean, what was it?
Well, I think it's everything that I mentioned so far, plus I'll add one more thing to it, but this may be the most important thing. I shy away from what's the most important, what's the least important type of questions, because it's usually more complicated than that. But I will say that from day one, they told us that we will teach you, we're going to teach you, we have taught you a way to navigate the markets for the rest of your life. This is not something for the 80s and 90s. This is not something for when, if the markets change and trends are harder and choppier, you won't know what to do. We were told how to navigate these principles and philosophies of how to build systems and stay in the game as long as we wanted to. And I fully believe that. And that's why I said I've never deviated from the broad general principles, and I haven't had to. So the one change that I've made, I mean, besides adding all the markets, which is, right up the alley of what they taught us, the only thing I really changed over the years is just to become longer term trend following, longer term look back, hold on to trades for about a year. Maybe back in the 80s and 90s, we were held in them for like a month. So now it's better, you make more money if you hold on for maybe 6 months to a year. This medium to long-term trend following, that time frame difference is, I mean, unfortunately, it's maybe shocking to some people, but believe me, it still works, and that's really the most major change I made.
So I asked you about your worst trade. Do you have a best trade during the program, like, during those 4 years?
Oh, during those 4 years. Oh yeah. Oh yeah. We had a great trade in 1980,
Let's hear
1986.
about it.
Yeah. 1986 was a great year. We were up 100, we were up 200% probably after 3 or 4 months. And it was a lot of things going on, but the one I remember the most was short crude oil. So we got short crude around 30. And in the 70s and maybe even in the early 80s, crude had gone gone up a lot in price. There've been some price shocks. My dad owned a gas station, so I worked at this gas station in high school, and that was part of rationing, and the price of gasoline was sky high, for that period of time,
Yeah.
30 cents or 20 cents or 30 cents, and it went to over $1. So being short crude in 86 and watching it go to $10 was quite a shock. And like
Wow.
most big trends where the CTAs and the trend followers make money, it was something that was unpredictable. It was a shock to everyone. No one knew it was coming, not even us who made the money on it. You just hit that breakout, the downside breakout, go short and hold on, and then look back and say, yeah, I was pretty surprised by that, but I was able to make a lot of money. So that was a trade I'll never forget.
Yeah, and on this show we usually sit here and talk about the market environment and what the market is maybe going to do in the next 3-6 months. But with you, I mean, it doesn't really matter too much, right? I mean, you're going to stick to your rules. You're going to just follow your system either way. And that's kind of the beauty of a systematic approach and trend following. So I guess, is that true? I mean, does the external market environment matter to a trend follower?
The external fundamentals and news and what's in the media, no, it should not. I mean, maybe maybe it impacts some people, and I think there are probably a few CTAs who try to incorporate fundamentals with technicals, which I don't. I don't think that's a good idea. But
I'd
it
agree with
doesn't
you.
have anything to do with me. I think that if most people could bring up a chart of a stock or a currency, a commodity, or an interest rate, and pretty much predict with a high degree of accuracy what my position was. So today is a bad day in the markets. Stocks rallied, bonds rallied, the dollar got crushed. So it's a counter trend day, and we lost a lot of money today. I remember early on, maybe 84, 85, Rich was being interviewed by, I think it was the Wall Street Journal or Barron's. And I read this interview, and they asked him, and one of the questions was, what do you think is going to work over the next 3 or 4 months? And I was very interested in his answer. And his answer was pretty much him going down his position sheet and reading off those positions. So if he was long cocoa, he said, I think cocoa is going to go up. If he was short the yen, he said, well, I think the yen's going to go down. So that's our answer. Whatever positions I have on now, that's my total guess. But that's probably what I would assume is going to work over the next few months. It could change, and I could change my position, but that's the best guess.
Yeah, yeah. I kind of got a kick out of it when we got on this call. We're recording this on Thursday, but the market it was up a lot today. I mean, the Russell was up 6%. And I said, how was your day, Jerry? And you said, it was a rough day for trend following. And I was like, oh, okay, yeah, you're right, because that was a counter trend move. So, and you're a trend follower. But how has this year, it's been a challenging year for most investors, but how has this year been for trend followers?
Probably one of the best years of all time.
No kidding.
Yeah, short
Yeah.
the bonds, long the dollar, and there's been some commodity plays, energy, crude, heating oil, unleaded, some of the grain markets. I would say, though, that since the fall of 2020, and it's almost, in 2020, 2021, 2022 are probably the three best years I've ever experienced. The trends have been amazing ever since the fall of 2020. And I think I've made more money, but due to leverage and trading a lot larger, but sort of risk adjusted. I'm sure we've never had 3 years in a row this good, but it has been an amazing, magical period. But the 3 years or 5 years before that kind of were bad. So we were due, we were owed. We've been sitting
Making
back
up for
waiting.
lost time.
It's another thing about trend following I bet you we didn't make money in the commodities for 10 years. And then 20 and 21, the commodities were amazing. And
Yeah,
I
no,
mean, probably not much difference in the currencies either. And we've made a lot of money in long dollar. And I mean, come on, the short interest rates, short bond trade hasn't worked for 20 years. So that's one of the secrets of trading. Do not pay attention to historical performance of a certain market or sector. Of course, we do our back test to determine our strategy, but the markets can be untrendy and hard and hard to navigate for long periods of time. And then all of a sudden, out of nowhere, you've got to be ready, hit those breakouts, hold on to those trades, and you'll make it all back and more.
yeah, and I'm glad you brought up the commodity boom. And I know you're very active in the commodity markets. And I keep hearing that, these commodity super cycles, whenever commodities have a bull market, they tend to last for years, right? And here we are about year 2 of this commodity bull market. And I'm wondering what you think of that. What do you think of some of these trends in commodities? Do you think they'll continue trending higher, or do you think this was kind of just an aberration?
Well, I have no idea. I could really care less. I hope they keep going. The ones I'm still in, I'm long. The grains and the met and the energy markets I mentioned. Yeah, I hope they keep going. But it's not correct for me to have this sort of mentality and overlay this sort of fundamental or commodity super cycle stuff on top of. And plus, I don't want to give people the wrong impression that I'm allowing this to play into my trading. I
Right.
don't need it. It could be the biggest commodity super cycle of all time, and as long as my system keeps me long, then that's what clients should care about. What I care about. I don't really know about commodity super cycles, and I just don't want to get myself thinking in that direction. I will say that these trades and these narratives can become like our little friend. We don't want to give them up, and we just fall in love with them. And so you don't want to get into a situation where that's going to impact your trading. You got to be cold-blooded and no loyalties to anything, and ready to get out of those commodity trades and go short if necessary. But it's just a distraction that's unnecessary and giving clients false impression as well, that you know what the hell is going to happen, and you really don't. But it is funny sometimes to get on a podcast and talk about your positions, and then the next time you're on, people can ask you, well, like, how did that work out for you? And you can say, oh yeah, I reversed my positions a few weeks later and made a ton of money on the other side. So don't
I
listen.
love
Don't take my advice for very long, because I could switch it all around and go the other way.
I love what you said there about how narratives can become your little buddy, and you definitely want to avoid that. But I think that's a great lesson. Trend lines over headlines, am I right?
Oh, one thing is I took your advice. I listened to some of your podcasts, watched them on YouTube, and
Okay.
I love your graphics. You copied a graphic from Wall Street Week.
You got me. You got me. Very good. Very good eye. I actually, so growing up, I would, I'll tell you a real quick story. Growing up, my first memory of the stock market was watching my dad watch Wall Street Week. And I was like, who is this Louis Rukeyser guy? Like, what is he talking about? What is this thing he's talking about? And why is my dad so captivated by it? He would sit there on a Friday night and just watch it, just glued to it. And to me, I was just a kid. I was like, who is this George Washington looking guy, And they had the little elves. And so I was really infatuated by it. And, when it came time to start the show, I was thinking like, what do I want to model it off of? And so that was the obvious choice.
I love that, because I watched that show when I was in my 20s. I would, come home on Friday night and couldn't wait for that show to come on. I loved it. I loved the elves. And this was
Yeah, the
my
elves.
formulating me. This was like I was learning real time. I didn't have the internet. I had Wall Street Week. And then I see Marty Zweig on there, and he's talking trend, diversification. And he's the
I'm a
most,
huge Marty Zweig
yeah,
fan.
he's the most humble guy I've ever met, I ever saw on TV. And this was, I subscribed to his newsletter. And this was what helped me make the high, I had a really high score on that turtle test. So Wall Street Week was like the beginning, my love affair for trading and trend and Zweig. And yeah, it was. And so when I saw that, I was like, this is amazing. I'm so glad you did that. That's there's so many great memories. Went, I had a chance, I invested in Marty Zweig's fund back in the 90s. And I went, so as a client, I was able to go to his office and kind of get a brief meeting.
Oh, that's
And
awesome.
yeah, and so I probably met with him for like 5 or 10 minutes actually. But his associate, talked to me about the fund, and all of a sudden I'm in there in his conference room, and he walks in, and he has this big turtle, and he slams it on the table,
A
and I was like,
turtle.
yeah, it's a plastic turtle, not a real turtle.
Well, yeah,
That would have been a
I
mess.
figured.
But yeah, he has this plastic rubber turtle or whatever, slams it on the desk to say hello. And I was like, what a guy, what a dream. Uh, and so, yeah, I had that fortunate thing. And the Zweig forecast. And one day, in the 2000s, early 2000s, I called up his office and I said, I want to buy every single newsletter he's ever put out. And they sold it to me. They sold me,
No way.
yeah, they sold me every single newsletter at the time that he had ever put out. I think it was
So
$500.
for 500 bucks, what did you do with all these?
I'm sad to say I have no idea where they are. But
No,
yeah,
I'm sure you do. You gotta do some digging.
it's a sad story. I have some storage somewhere. I need to go digging in my storage in Richmond. But yeah, no, that Wall Street Week thing, great memories. And it's really one of the reasons I am where I am today, for sure.
Well, Jerry, this was awesome. Thank you again so much for coming on, and I hope you have a great weekend.
Yeah, you too. Thanks, Patrick. I enjoyed it.
Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe, and we'll see you again next week. I'm so happy that you noticed that the font and everything, right? You can't see him out. He's here, Brandon, come here. So our video guy here, he's a 19-year-old kid, but when I came up with the idea for the show, I was like, I showed him Wall Street Week, and I said, yeah, do something like that, and found the fonts on, like, he must have like ripped the font somehow and found it and did that, and so that's awesome that you noticed that.
Yeah, no, I was so impressed. I was so happy to see that. And I was going to mention that to you, but I didn't write it down. And so thankfully it just came to me all of a sudden.